Inflation has definitely returned, or at least has not left Western nations, but other economic data is starting to deteriorate. So hi there everyone, welcome to the Traders Circle weekly market update. Today is Tuesday the 30th of April 2024, and before I start, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for you. The sort of major ongoing story at the moment is company earnings. We've seen company earnings in the US. There's been some standout performers. There have been some underwhelming performances. I think probably the best reports, or at least most positive for the market, have come from Microsoft and Google. Each of them exceeded expectations. Each of them jumped, I think, double-digit percentages, and that restored confidence that at least the very top end of the market, still has really solid earnings. There were some underwhelming performances, including Facebook, and I thought Tesla, although Tesla did rise after its report. We will see the US company earnings continue tonight. We're going to see Amazon, AMD, a few other large names tonight, and for the remainder of the week, there's going to be some pretty large companies reporting results. So do keep an eye out there, and we would expect to see some movement on the back of those reports. Following the US reports, we are going to see some Australian bank reports. So this is the bank reporting season. We're going to see NAB report on Thursday. ANZ, Westpac, Macquarie will also report. CBA is the only major bank that doesn't report this period. Our banks are historically very expensive by just about every metric. So do be careful trading around this period. Do consider if we could see some movement on those banks. And like I said, they are very expensive, so they're going to have to deliver some pretty extremely positive results if they want to continue higher. I also want to touch on the Fed meeting. So we will see the Fed go into a two-day meeting. They're going to start tonight, and then they'll finish that meeting tomorrow night. And we will see, the results of that meeting tomorrow night. It's almost guaranteed there's going to be no change in US interest rates at this meeting, although stranger things have happened. Instead, the market will be looking for any commentary around rate cuts this year. So the market was originally hoping for 5 rate cuts in 2024. That then dropped to 3. And now we're starting to question whether there'll even be 1 rate cut this year. Like I said at the start, data has continued to be quite inflationary in the Western world. In fact, it's even ticked up slightly in March, where everyone was expecting that it continued to drift lower. So we've had 3 months of really sticky and stronger than expected inflation, January, February, March. And now everyone will be looking towards the Federal Reserve to see whether they're going to continue with their narrative, or at least Jerome Powell's narrative, that this is just a blip higher in the overall trend lower in inflation, or whether they finally acknowledge that, maybe things are a little more inflationary than they have been originally thinking, and that, rates are going to stay higher for longer, perhaps even head higher in response to this inflation. The interesting thing is that we will see... we have seen other economic data start to weaken. So US GDP for the first quarter was lower than expected. Today we had weaker than expected Australian retail sales. And that starts to call into question whether we're going to see a stagflationary scenario. And that's where economic data is really weak. Some people say where economic data is recessionary, yet inflation is still strong. Unfortunately, that's a terrible scenario. That would be terrible for the market. If inflation does remain very strong, but other data starts to weaken, and people start to talk about stagflation, that is a potential bearish catalyst for global stock markets. So that is the sort of key thing I wanted to touch on this week. Like I said, US GDP growth much lower than expected, Australian retail sales lower than expected, but inflation, again, much stickier, much higher than expected. Usually this is a very, very negative thing for markets, and I suspect that this time around it will be quite negative for markets. The one perhaps saving grace for markets is that we've had a recent example of stagflation, and it hasn't been that negative for the share markets there, and that is Europe. Europe, by just about every economic metric, has been terrible in terms of economic performance recently. They've had recessions in Germany, in France, in the UK, and yet they've had, sticky inflation, higher interest rates. So they have had stagflation in much of Europe for really, much of the last 2 years. Yet their share markets actually haven't done too badly. They've followed the global rallies. they've pushed higher. Go and look at the German DAX index, and it was as bullish as just about everything at the start of this year. And so stagflation wasn't necessarily a dirty word then. Now that share market performance was justified by people saying, well, those large stocks that made up those share indices were actually globally focused, and they were benefiting from the strength in the US, from the strength in Asia, from the strength elsewhere. If the US does face that economic weakness, it's going to be hard for people to point at that and go, well, yes, the US is in stagflation, but at least in Europe, things are going well. Unfortunately, they aren't. So I'm not sure if the US will be able to use the same rationalization to continue to push their market higher. So that is something to watch out for. Any further talk of stagflation, like I said, the sort of next major thing will be the Fed meeting. That's going to be on Wednesday night. And let's have a look at the charts for this week. So this is the X-share, the top 200 Australian shares, and we can see that it's broken the longer term uptrend. It has started to form a bit of a downtrend, and we've just come back to test that downtrend line. In the next 2 or 3 sessions, I suspect we'll have either broken through that downtrend line, or we'll have held that trend line and we'll be pushing lower. I would expect most likely we would head lower after this. Again, it will come down to the US Federal Reserve though, and just how sort of hawkish or dovish they are. The US is fairly similar. They've broken their longer term uptrend line as well. They've come back to their downtrend line as well. And again, it's going to come down to whether the Fed says, yes, we will still cut rates, or whether they say higher for longer with potential more rate rises on the horizon. And that's going to determine whether they do break higher or lower from here. Like I said, my best guess would be for a break lower, just given the fact that interest rate cuts now look fairly unlikely anytime soon. So I will wrap it up there for this week, guys. Hopefully you enjoyed. If you did, click like, click subscribe, and we'll see you in the next one.